Welcome to the Treasury Tapes. I'm your host, Arisha, and today we are joined by Eric Pollackov, who is currently serving as the head of ETF Capital Markets at Invesco. We will be discussing the rapid growth of ETFs, the emerging trends in cryptocurrencies, and key trends and developments shaping the ETF market. As a certified advisor myself, I'm particularly excited to dive into these topics with Eric. So, before we get into today's topic, I'd like to introduce our guest. Eric is, in his current role, leads capital market strategies and client business plans. With experience at Charles Schwab's, New York Stock Exchange, Euronext, and SIG, Eric has been a key figure in the ETF industry since 1999, making him a true expert in this space. So, Eric, welcome to the show and great to have you here. So let's jump right in. Here goes my first question for you, Eric. ETFs have been witnessing explosive growth in terms of asset gathering, reaching nearly $10 trillion globally as of 2023. So, what are the key factors driving this unprecedented surge in ETF popularity, especially in the context of recent market dynamics?
Yeah, I think it's kind of somewhat basic and it's been learned for a while now. But if we think about in the United States alone, and our first ETF was born in 1993, and it really was built the industry on the backs of registered investment advisors down to retail individual investors on the ETF world. It wasn't for a couple of decades until institutions really started thinking about it. And then the reasons are why is that? Well, if we think about sort of the role of a registered investment advisor in the United States is managing their clients' money, right? And they want to kind of do it in the most cost-effective manner. So one is the cost effectiveness versus, say, a mutual fund cousin is part of it. Two, the capabilities to trade intraday as opposed to one single price at the end of the day, like a mutual fund, is another kind of thought process there. And three, and we always talk about this, but the tax efficiency of the ETF technology is what I call it, is definitely has advantages over many mutual funds. But then I think about like things like the financial crisis of 2008, right, and the Lehman Brothers collapse and Madoff, etc. And then we go into the next like attribute of the exchange traded fund, and that's transparency, right? So you know if you had exposure to Lehman Brothers during the September of 2008, whereas in a mutual fund, you may not know for quarters after, right? So when we think about those four things, again, it's sort of like a technology advancement in terms of investments. And I think it's only going to grow and continue to grow as generations, and you put an age on me by telling everybody what time I got in this industry. But I think like the folks in the next generation will be part of the ETF, tidal wave as well.
For sure. So I'd ask a follow-up question to this, to your response. Are there any specific sectors or themes that are attracting the most attention from investors?
So, I mean, themes are fleeting, right? Depending on where you are in an economic cycle, where we are with, the financial fiscal policy of our country. But one of the things that we've taken a big advantage of is our equal weight strategy. So where we take the S&P 500 and it gets equally weighted amongst the 500 securities. So you get away from sort of that top-heavy Mag 7 phenomena that we've seen with the likes of NVIDIA, Google, etc. So that's been a really good strategy for us. And at the same time, we have a market cap weighted strategy that's based upon the NASDAQ 100. And those two products have been real outstanding asset gatherers for us, and for good reasons, right? And each is different on the reasons why. Some people want that exposure to sort of the Mag 7 and then the rest of the index, and then some don't, right? And are wary of that, of the tech bubble that we saw in 2000, for example. So those are two strategies that are kind of different, but yet they're still giving us a good asset gathering part for 2024.
Of course. So yeah, it's interesting to hear how various factors are converging to fuel this growth. Speaking of areas attracting attention these days, so with the recent introduction of Bitcoin and Ethereum ETFs, particularly in major markets like US. We are seeing significant interest in crypto-linked financial products. So, given this strong initial performance of of these ETFs and the growing acceptance of digital assets, what do you anticipate as the next major development in the cryptocurrency ETF space? So, like, could we see ETFs linked to other cryptocurrencies, or perhaps innovative structures like DeFi ETFs gaining traction?
So it's a great question. I think we're all aware January 11th of 2024 was the SEC allowing 10 issuers at the time, come out with a physically backed Bitcoin ETF, and it's exploded. And I think if you go back to my original statements on why ETFs are exploding, it's really kind of that individual investor and maybe some RIA, but I think at the very outset for the first couple of quarters, since the launch of the Bitcoin ETFs, it's been mostly individual retail investors. With that being said, we have heard from clients' demands on the registered investment advisor side that they want to put 1% of their portfolio into it, or 2%, et cetera. So that's where I think you're seeing the growth there. Now, what's next? Well, I think a lot of it has to do with the regulatory body that we'll see post the election. I'm not sure, what that will look like, quite frankly. But the reality is that the current administration at the SEC has not been, say, crypto friendly with regards to allowing some innovation occur from the asset management side of the world. But I mean, you could think about all the different things that have already been filed for, right? So I think there's already been a covered call strategy on Bitcoin being filed for. There's a strategy that is going to be market cap weighted based upon maybe just Bitcoin and ETH, so maybe 75-25 or something along those lines. We haven't even touched the surface on how innovative we can be as an industry, just because of sort of the regulatory environment that we're sitting in. If that changes post November, then I think the sky's the limit with regards to what people can think of, right, and what people can kind of conceptualize should be within that e-technology. I think that's sort of the next step. Maybe other issuers. I know that Solana has been filed for by a couple of my competitors. Excuse me. And I think that there's another few index-based products that are going to look at maybe the top 10 from a market cap weighted perspective that may be coming down the pike too. These things have been filed for, and they've also been asked to be delayed. So again, I don't think anything will happen, quite frankly, until after the election.
Right. Okay. Okay, so like, what kind of changes are you expecting or anticipating post-election, if at all?
No, I mean, so again, if Vice President Harris wins, then it looks like the current administration will probably remain, and that means Gary Gensler and folks will remain. If former President Donald Trump wins, then it's probably going to start a new regime at the SEC. But even that will take time, 6 to 9 to 12 months. And so again, we're looking at like 2020, end of 2025, maybe 2026 before we start seeing, if there's a different administration at the SEC, a level of innovation that I would expect, what we've done so far in this industry to take foothold.
Right. Okay. That sounds good. So now, like, as the cryptocurrency space continues to evolve, it brings up another crucial aspect of ETF market, that is liquidity. So let's shift our focus to this key area. So liquidity is a crucial factor in the ETF market, so especially institutional investors. Invesco has made significant strides in improving ETF liquidity, particularly in less liquid asset classes like fixed income or international equities. So could you explain the mechanisms Invesco employs to ensure liquidity in these ETFs, and how do you manage balance between liquidity and tracking error in more complex ETFs?
Yeah, so just alone in the United States, we manage 228 ETFs, and they vary from commodity futures to bank loans to cryptocurrencies to equities of all types and flavors. So each one is going to have a specific kind of lesson to be learned when we talk to the sell side, so the trading firms out there that we engage with, to make sure that we understand their needs. Then, as you alluded to, I need to understand the needs of my portfolio manager, right? And doing what's best to, let's say, either track an index or be an active manager as well, but still be sell side kind of friendly. And that's the kind of conversations that my team, the PMs and the trading firms that provide liquidity have been having since I got into this industry, and that's part of where my background stares at. So with that being said, I mean, I look at a product like bank loan, which launched in 2011. If you think about the average settlement time for a physical bank loan is anywhere from 7 to 21 days, right? But an ETF, settles now T+1. So how do you think about that kind of mismatch in discussions? Well, there's ways that our portfolio managers will either hold on to some cash in case there's a run on redemptions to make sure that they have, but that does provide a little bit of tracking error from the index, which doesn't hold any cash, right? So these are the types of kind of trade-offs that we have to make in order to make BKLN, for example, one of the most liquid ETFs in the world right now because of the measurements that we've done. So that's sort of how we kind of mix those conversations together to make sure that investors understand that they have what we think is one of the most liquid products out there.
Right. Okay. Yeah, so like on a related note, I also want to know from you on something where Invesco has been making significant contributions, that is smart beta ETFs. So Invesco has been a leader in the development of smart beta ETFs, which have grown in popularity as investors seek alternatives to traditional cap weighted indexes. Could you delve into methodologies behind Invesco's smart beta strategies, and how do these strategies aim to enhance returns or manage risk in comparison to conventional ETFs, particularly in volatile market environments?
Yeah. So, I mean, if you think about Power Shares, which was started in 2003, it was purchased in 2006 by Invesco, was really sort of the ETF kind of vanguard, if it's the right word to use, in terms of what you just talked about, is alternative weighting methodologies of evaluating a security, right? And if you look at sort of our first foray in 07, was using the FTSE RAFI methodology. And that basically looked at a company's economic footprint through book value, cash flow, sales, and then dividends, right? And that's how you evaluate the company, as opposed to just taking the share price times the amount of shares outstanding and sticking it into an index. So again, and that's just one type of smart beta ETF that we use, that we employ for all types of investors. We have a Dorsey Wright methodology, which is not market cap weighted either. So those are the types of kind of conversations that we work with index providers to provide alternatives to what's already in the marketplace. And again, to give investors another way to look at the economic footprint of a company as opposed to just market cap.
Right. Okay. That sounds interesting. And before we wrap up, is there anything else on the horizon for ETFs, or any final thoughts you'd like to share with our listeners?
Well, I think the sheer explosion since the ETF was implemented in 2019 of the actively managed ETF. I think that even investors now forget, asset managers, we can launch stuff and see what sort of sticks, right? That's not how we look at it, but I've seen that done before from a business model perspective. What really is telling is people voting with their dollars, right? So if active management, which we were the first ones to actually file for an active managed ETF in 2008, and we listed a product in 2009. We know that business really, really well. But I think it's the rest of sort of the industry, particularly on the fund side, that has said, okay, you know what, we can start using this technology, and investors will use it too. And I think that's a really, a huge uptake that we've seen over the last couple of years, and that I think we'll continue to see as well. And then finally, I know that there's been a lot of work, and there has already been a lot of work done on this, but I think for the 401k or the defined, benefit plans, I think we'll now start to think about, maybe is there some advantages by using an ETF. You sort of lose that tax efficiency kind of conversation we talked about, but I do think that is sort of the next wave that can potentially bring the ETF industry even further into clients' lives.
Awesome, that's good to know. So that was an incredibly insightful discussion, Eric. So we have covered a lot of ground today, from explosive growth of ETF to evolving landscape of cryptocurrency ETFs, liquidity strategies, and innovation behind smart beta ETFs. Your expertise has truly, shed light on these complex topics. So thank you so much, Eric, for joining us today and sharing your valuable insights. So it's been a pleasure having you on the show. So yeah, until next time, I'm Arya Shah. Stay informed and keep exploring the markets. Thank you.